Welcome back to the Crypto Report, everybody. I'm Crypto Kip, and today we're going to be talking about Bitcoin's going down. Why? On account of the PCE data that came out today regarding inflation. People are starting to worry in the traditional market. The Dow is crashing to the S&P 500 is testing some of its lows. Also, Bitcoin is making a move downward slightly, but are we going to recover back up? Can the end of February still become bullish, guys? Can it become bullish? And will March be a bullish month for Bitcoin and crypto as well? Can we get this beautiful Q1 that we were hoping for? Let's talk a little bit about it. Let's see what's going on here and what you need to know. If you like the content, smash the like button, subscribe to the channel. We're doing 5 videos every day, and when we hit 10,000 subscribers, we're giving away $1,000 worth of Bitcoin to one lucky subscriber, so do not miss out on that, folks. But yeah, you gotta know the market cap is down to 1 trillion, $1.05 trillion. So markets are all getting affected, and you can see Bitcoin broke slightly below 23,000 today for a second. It is back above it. Ethereum is below $1,600. We were just at $1,700 the other day. But look, all these cryptos are going down. Why? It's all because of this inflation worry, guys. And so unfortunately, look, the Fed is keeping an eye, guys, on some of these indicators, and the January PCE price index numbers, they unexpectedly rose to 5.4%. And so the Dow, the traditional market, came down. And we've been talking a lot about this on the channel, that if the S&P and the Dow start going down, guys, that can affect the Bitcoin and crypto markets. That being said, the Dow's down 400 points. Well, Bitcoin's only down about 400 points. So this is really interesting to see that crypto and the regular market, they're trading together, which is unfortunate. I do want to see Bitcoin split away from the traditional market, but there's been days, for example, where the traditional market goes down and Bitcoin goes up. We've seen that a little bit. We haven't seen it in a drastic way, but I do think that as we get closer to this bull market, we can anticipate these to split off just a little bit more, right? Not entirely. I don't think it's totally going to go on its own path, Bitcoin versus the regular market. But right now, today, everything's going down because of this information. Today, it is down on account of this data that came out, guys. And so this is the core personal consumption expenditures price index. This is the Fed's preferred measurement of inflation. Rose 0.6% in January and 4.7% from the prior year. Now, this report that came out today added to the worries that the Fed may have to keep higher rates for longer to quell inflationary pressures, which kind of crushes the story of the Fed's soft landing. So essentially, guys, this isn't saying, by the way, that Federal Chair Jerome Powell next FOMC meeting is going to come out with a 0.5% interest rate hike. This does not mean that the 0.25% interest rate hike that we've been expecting is not coming. It does mean, though, that it is less likely than it was, and it does mean that a 0.5% interest rate hike might be more likely because they need to continue to battle inflation. That being said, there's still only about a 30% chance right now, these are the recent numbers, that there's a 0.5% rate hike that is expected. So I'm still expecting a 0.25% interest rate hike. And honestly, guys, as long as we get that, then I do think we're going to turn pretty bullish again pretty fast, because all this is saying, this data, is that instead of us kind of reversing inflation as quickly as we thought, well, maybe we just got to do 1 or 2 more 0.25% rate hike increases here, and then we can kind of start to get out of the inflation troubles that we've been in. Maybe we push out to worst case scenario July right now. We'll have to see how all this data unfolds, but this is what we're thinking, guys. So, people are saying, though, this market has been pretty jittery this week, so any disappointing data is going to have an outsized impact. This is an exaggerated move today. And so we're seeing some of these moves. They're saying, hey, this may test recent lows, but don't think it's going to push to new lows. This just confirmation that the Fed is going to go to 5% instead of 5.25%, which is consensus. So these are things that folks here in the traditional market are thinking. But this is important to say, therefore, I don't think it's enough to say that the rally of 2023 is over. So people are saying this. They don't think that's the case, and they think a lot of this is baked into what the expectations are for monetary policy already. So really, this is just reactionary, moves here in the market today. And unfortunately, it did drive Bitcoin down. And now, so you see, these are some of the levels that I've been talking about here on Bitcoin. Bitcoin did break down below, first of all, some of these moving averages. If you see this red and blue moving average here, we broke down below both of those on the 4-hourly candles, guys. So this isn't like the week-long indicators. In fact, we're well above it on both, on all metrics on the week-long indicators, which is great. But on the 4-hourly, we temporarily broke below it. So kind of one of two things can happen here. One, we're going to turn this thing around very fast, and we're going to kind of come right back up and try to get back to these levels here, possibly due to the end of this monthly candle. And, just given that this is kind of an oversold moment, this is an overreaction by the markets. So that's one option, because we're right kind of at that threshold where, boom, we could come back up. Or two, we might continue to break below it and test the low half of 21,000, maybe even 19, maybe even 19,000. But I really expect to, kind of see this. So if we break below this barrier, then we can start talking about 19,000 again. But I really do think that we're going to kind of play some games here. But overall, guys, it's an over-exaggerated reaction, I think, from this news. Just the Fed games, right? But here, again, when you look at this chart, these are the weekly candles, guys. We're doing the opposite, right? We are starting to break out above some of these moving averages, which is great to see. And this is what we're up against, guys. We are trying to break above this red moving average, and this has proven to be a struggle. And so this is just sensical. This makes sense. And so if we can break above this, guys, if we can kind of break above this $23,000 or $25,300 price level for Bitcoin, then we will get to that $30,000 price range. But we'll have to see, folks. We'll have to see. That being said, guys, look, Bitcoin kind of tells you what the rest of the markets do. Over the last 7 days, there's a couple outliers that are performing. But, even in the last 24 hours, the ones that have been up hundreds of % over the last 7 days, all these are retracing today. Over the last 24 hours, there's only a couple, 1, 2, 3, 4, 5, 6, 7 cryptos that are in the green today. The whole crypto market is going down. Over the last hour, almost everything is, either flat or red. Why? Because I do think we're kind of starting to potentially recover. I wouldn't be surprised if we did. And there's a couple of reasons for that. One, we're historically cheap, guys. You've seen this Bitcoin rainbow chart a lot of times. Look, we got a lot of time to accumulate here before the next bull run. And keep this in mind. This is huge. The Bitcoin futures on the CME, the Chicago Mercantile Exchange, outpaced those on Binance. So what does this mean, guys? Yeah, you read this right. Bitcoin futures really are unusually trading at a higher premium on the Chicago Mercantile Exchange than on Binance. What does this mean? This basically means, guys, that this is institutional activity. They are trading and they're paying 9% premium to get exposure to this futures on Bitcoin. This is higher than the demand on Binance right now. What does that tell you, guys? Again, we are very, very low in the price of Bitcoin. People are recognizing it. Institutions are recognizing it. And we are getting ready to make all-time highs again in the next bull market, regardless of what happens with some of this data. And, even folks are saying, this is Peter Schiff's website, actually, they're saying, hey, you're better off in gold than dollars. Why? Because the dollar is set up for long-term depreciation as the world drifts towards de-dollarization. Now, we've been talking about this a lot on the channel, and this is absolutely true. The only unfortunate thing is they don't like to talk about Bitcoin. And so if you like gold, you should like Bitcoin, because Bitcoin's better than gold. And if the gold bugs and the Bitcoin bugs agree on one thing, it is this. There is a move away from the dollar, and you need to protect your money by not just having dollars, because over time, the dollar is getting you less far in the world. It is getting less purchasing power, and so you need to protect yourself against that, and Bitcoin's the way to do it. So we'll keep you guys up to date with all of that. We are giving away a loaded lion when we hit 25,000 subscribers on the channel. If you do want access to this giveaway, all you got to do is follow us on Twitter at _crypto report. We're giving away this loaded line right here. And if you're a member on the channel, you get an additional 10 entries for every month you are a subscriber, a member on the channel. All you got to do is be, join right here or in the link in the description down below. We get some free money for you guys when you sign up for any leverage trading platform as well in the links below. So take advantage, guys. Take advantage. But, don't scare yourself out of anything today. Matter of fact, I dollar cost averaged today, folks. What a beautiful buying opportunity we had today on account of this news. I took full advantage of it. Bought myself another Ethereum. A couple other coins here we'll tell you about soon. Very, very excited, guys. That's all I got. I'm Crypto Kip. This is the Crypto Report. Don't forget to smash up the like button, subscribe to the channel, and as always, you got to remember, folks, to DCA, HODL. We'll see you in the next one. Thanks, everybody. Have a great night. Got 2 videos for you here if you want to check them out. Peace.